Imagine this. An artificial intelligence system scans millions of news articles, earnings reports, and even social media posts every single day. It spots subtle patterns no human could ever detect. And then, in milliseconds, it places a trade, not based on gut feeling, not based on fear or greed, but purely on data. The result? That trade often beats the very hedge funds and experts who have spent their entire lives studying the market. This isn't science fiction. It's happening right now. AI is starting to outperform some of the best minds on Wall Street, and the big question is, can you trust it with your money? And for decades, Wall Street was ruled by human intuition. Picture the noisy trading floors of the 1980s and 1990s. Brokers shouting, phones ringing, buy and sell orders being scribbled down on slips of paper. These traders relied on experience, instincts, and sometimes pure adrenaline to make money. Then came algorithms. Computer programs that could execute trades automatically, following predefined rules. This was already revolutionary. Trades that took humans minutes or hours could now be done in microseconds. But today we're in a new era. Artificial intelligence that doesn't just follow rules, it learns. It adapts. It improves itself over time. And that's what makes it so powerful. And take the example of EquBot, an AI-powered investment platform built on IBM's Watson. EquBot manages exchange-traded funds that analyze more than 10,000 news articles, financial statements, and market signals every single day. Imagine hiring 1,000 financial analysts, all working for you around the clock, never sleeping, never burning out. That's EquBot. And it's not alone. JP Morgan has developed an AI trading system called LOXM, designed to execute large trades at lightning speed while minimizing market impact. Goldman Sachs invested in Kensho, an AI platform that can instantly answer complex financial questions like, what happens to oil stocks if there's tension in the Middle East? Hedge funds, investment banks, and asset managers are pouring billions into AI research because they know one thing. Whoever masters AI in finance will dominate the future of investing. So why exactly does AI perform so well compared to human traders? First, speed. An AI can process and act on information in microseconds. Imagine a company releasing its quarterly earnings. By the time a human analyst finishes reading page 2, the AI has already scanned the entire report, compared it with historical data, monitored social media sentiment, and decided whether to buy or sell. Second, no emotions. Humans fall victim to fear, greed, panic, and overconfidence. Markets crash not always because of numbers, but because of how people react to those numbers. AI doesn't panic. It doesn't get greedy. It doesn't hesitate. It follows the data with cold precision. Third, scale. A human analyst might cover 10 companies really well. A team of analysts might cover 100. But an AI can analyze thousands of companies across dozens of industries in real time. Currencies, commodities, global news, weather events, all factored in simultaneously. This combination of speed, objectivity, and scale gives AI an edge. In fact, several AI-driven funds have already outperformed the S&P 500, the benchmark that even top fund managers rarely beat consistently. But before you hand over your life savings to a robot, let's talk about the limits and risks. AI is only as good as the data it's trained on. If that data is biased, incomplete, or misleading, the results will be flawed. Take the 2008 financial crisis. Markets collapsed because of human behavior and risky mortgage practices. AI systems back then, and even today, struggle with events they've never seen before. They can analyze history, but if something truly unprecedented happens, the model may fail. Another risk is overfitting. That's when the AI sees patterns in the data that aren't actually real. It's like memorizing answers for an exam instead of understanding the subject. The AI looks brilliant in back tests, but when faced with the future, it makes the wrong call. And then there's the black box problem. Many AI systems are so complex that even their creators don't fully understand why they make certain decisions. When a fund manager can't explain why the AI just bought millions of dollars of a stock, regulators get nervous. And investors hesitate to trust what they can't explain. So while AI is powerful, it's not infallible. Relying on it blindly could be dangerous. Now here's the exciting part. AI investing isn't just for billion-dollar hedge funds anymore. Retail investors, everyday people like you and me, can now access these tools. Take Q.ai, an app that uses artificial intelligence to build and rebalance portfolios automatically, tailored to your risk level. Or Trade Ideas, a platform that uses AI named Holly to scan thousands of stocks daily and alert you to potential trading opportunities. Or FinChat, which acts like ChatGPT but for finance. Ask it, what was Tesla's revenue growth last quarter? And it instantly pulls the answer from official filings, saving you hours of research. Even platforms like Robinhood are experimenting with AI-driven insights for retail traders. These tools used to cost tens of thousands of dollars a month, available only to big institutions. Now they're accessible for a few $100s, sometimes even less. This is the democratization of Wall Street technology. And it's giving regular investors a fighting chance against the pros. So what does the future look like? By 2030, most portfolios will likely be AI managed by default. Your retirement account, your savings, your investments, all guided by algorithms running in the background. Human traders won't disappear completely, but their role will evolve. Instead of executing trades, they'll become strategists, setting goals, monitoring risk, and making sure the AI stays on track. Banks and funds that fail to adopt AI will be left behind. The ones that embrace it will dominate global markets. It's not a question of if, it's a question of when. So should you trust AI with your money? That's for you to decide. But one thing is clear, AI is changing Wall Street forever. The question is whether you'll adapt with it or be left behind. Wall Street isn't ready for this change, but you can be. If you want to stay ahead of the game, start learning how these tools work today. Which AI tool would you try first? Drop your thoughts in the comments below. And don't forget to subscribe to Next Gen Finance for more smart money moves in the age of AI.